Hey again, everyone, it's your favorite financial analyst here with a quick update on the latest happenings in the world of currency. As you may have heard, the US dollar has been struggling recently, actually hitting a 7-month low against other major currencies like the euro and the British pound. But what is behind the decline? Well, it looks like investors are feeling pretty confident that the Federal Reserve may be nearing the end of its rate hike cycle. If you're not familiar with what that means, basically the Fed has been gradually increasing interest rates in an effort to cool inflation, but it looks like the effects of these rate hikes have been felt in the economy, and investors are now expecting rates to peak just under 5% by June. Now, you might be wondering what this all has to do with the value of the US dollar. Well, when interest rates go up, it can make the dollar more attractive to investors, which can drive up its value. But if investors think the Fed is done raising rates for now, that could mean less demand for the dollar, which can cause its value to go down. But there's more to this story than just the Fed. It looks like China's rapid reopening is also driving demand for riskier assets like the Australian and New Zealand dollars, which are performing particularly well against the US dollar. These anti-Tibetan currencies are often used as a proxy for the Chinese yuan. So when the yuan is doing well, these two currencies tend to do well also. And speaking of the Fed, we've obviously got a big event coming up today, a speech from Federal Reserve Chair Jerome Powell at a central bank conference. This could be a big opportunity for Powell to offer some signals or hints on the Fed's plans going forward. So to be sure to keep an eye out for any of these updates. And I think whatever comes from this may actually be a driving movement in markets later today. And as our focus on this channel is often more about stocks, what does this actually mean for the stock market? Well, a weaker US dollar can be good news for US companies that do a lot of business overseas, since it makes their products more competitive on the global market. But it can lead to higher prices for imported goods, which could put a damper on consumer spending and add another twist to inflationary pressures. All in all, it looks like the Fed's rate hike cycle may be coming to an end, at least for now, but there still could be some rises ahead. And while this could have some implications for the stock market and global economy, it is important to remember that these things are always in flux and can change quickly. But hey, at least we can take a little bit of comfort knowing the US dollar's big climb down has begun, as George Saravalis, head of foreign exchange research at Dutch Bank, put it. And let's be real, hasn't it been a bit of a rough ride for the greenback lately? Maybe it's time for a little bit of a break. All right, everyone, that's all for now. As always, stay tuned for more updates on the world of finance, including any news from Jerome Powell's speech later today. And don't forget to like and subscribe if you enjoyed this video. Thanks for watching.